So hi investors, welcome to today's video. Today we are gonna decode one of the interesting company in watches space and Timex Group India, the 170-year-old watchmaker quietly building one of the India's most interesting consumer turnaround, and walk into mall, open Amazon, browse the Myntra, visit a airport retail store, look at the watches people are buying, some wearing Titan, some wearing Seiko, even some wearing Apple watches, but hidden in plain sight is a company that most investors completely ignored for years, and the company that once considered a slow-moving legacy watch brand, a company that is now quietly delivering one of the strongest growth phase in Indian consumption discretionary space. Yeah, and in FY26, it did something irremarkable. It crossed the 800 crores of revenue. Revenue grew by 46% on YoY basis. EBITDA was jumped around 134% on YoY basis, and profit before tax was surged by 151% on YoY basis. And this transformation happened without building a single trendy startup brand, or instead it happened through premiumization, distribution expansion, even luxury partnership and e-commerce scaling, and complete with reinventation and of the business model. And this is the story of Timex Group India Limited, and why the market is suddenly paying attention to this. Let's look towards it. Chapter 1: The company most investors forgot. When investors hear Timex, they think about watch company, but Timex today is far more than the company trace to root back in 1854, making it one of the oldest watchmaker in the world. Timex entered in India in 1988, went through multiple joint ventures, survived intense competition, witnessed the rise of Titan, saw a smartwatch disruption in the market, yet remained relevant. Today, Timex India operates across multiple segments: mass market watch, the classic Timex brand; fashion watches, they have Gus in their umbrella; Nautica, Ted Baker, Furla, Philippine, and luxury watches, Versace, Ferragamo. This all comes into their band. Even recently they have launched Aston Martin related watch, and even some fun brand. So smartwatches, they have eye connect by Timex, and this is the important because Timex is no longer dependent on a single consumer category. It is now presented in 1,000 rupees watch, 5,000 rupees, 20,000 rupees watch, even in 1 lakh luxury watch. So this diversification is becoming one of the biggest growth drivers. Chapter 2: India's watch market is changing. Most people think watches are mature category, but that assumption is wrong. India's watch industry is going through a structural transformation. A decade ago, watches were utility product. Today, they are fashion accessories, lifestyle statement, and status symbol. The result, even premium gift product. The result, consumers are increasingly upgrading. Instead of buying 1,000 rupee watch, they are buying 5,000 to 20,000 rupee watch, fashion watch. Instead of buying one watch every decade, they are buying multiple watches, one for work, one for casual wear, and one for occasion. This premiumization trend is creating a massive opportunity for companies that own a strong brand. Even Timex sit directly at the center of this shift. So in the last quarter itself, the majority of revenue, I think so, I only contributed because I bought one Versace watch, and even I think two Versace watch, sorry, and one Ferragamo, and even one this Timex just got delivered yesterday. And this I also love watches, and even I have Seiko watch and all that stuff, but I also love this low entering brand watches. So, and even I am an investor, so I just want to watch my company's watch also. The number that changed everything. Let's look at FY26. The company reported revenue of 800 crores yearly, and revenue growth was around 48% on YoY basis. EBITDA growth was 134% on YoY basis. PBITA, profit before tax, growth was around 151%, and PBITA margin was around expanded to 13.4%. So for consumer brand business, this kind of operating leverage is significantly, and because it tells something important, that revenue is growing much faster than fixed cost, and which means the profitability can accelerate disproportionately. And this is exactly what investors like to see in a business where every additional rupee of sale creates much larger incremental profits. Chapter 4, the real story in channel expansion. Most investors focus on product, management is focused on distribution, and that's where the real story lies. FY26 channel performance, e-commerce was 90% of growth they brought from e-commerce. Trade channel were 32% growth they came from. Other channel high double digit growth came from. Think about what this means, that Timex is winning both online and offline game. Usually companies succeed in one but not both, but Timex has built diversified distribution ecosystem. They are winning in both. So if you look toward their Timex distribution network, 5,500 plus multi-brand outlet, 362 large format stores, 510 defense canteen, 149 luxury retail store, 44 company retail store, presence across Amazon, Flipkart, Myntra, Nautica, Ajio, Tata Clip. This creates a humorous reach, and more importantly, it creates a resilience. If one channel slows down, other continues to grow. Chapter 5, why margin are rising. Revenue growth alone doesn't accelerate the investor, margin expansion does, and Timex is seeing exactly that. Why? Because the sale mix is changing. Large share of revenue is now coming from premium. Because the sale mix is changing, a large share of revenue is coming from premium brand, luxury brand, even fashion watches, a higher value collection, and this product generates a significantly better gross margin. This enters entry level watches, and the execution of acquisition of these Just watches has further accelerated this shift. The Just Watch acquisition, a lot of investors underestimated this acquisition, but strategically it is important, most important. Timex didn't simply acquire the store, it acquired the premium retail relationship and a luxury watch customer, a dedicated watch retail ecosystem, existing online platform, and this gives the Timex directly access to affluent consumer and improves the brand positioning significantly. So last only month I have visited Delhi, and there also I visited the Just Watch store. So Just Watch store is just a brand which Timex has, so Versace and all that. So that only brands are displayed in Just Watch, not other brands like Titan or any of stuff. So there is exclusive Timex brand watches which we get in Just Watches, not like just in time. In Bombay there are much more stores of just in time, so there are all kind of watches. They keep the Titan and all that stuff, but this is a Timex watch company, so they only provide the Timex brands companies only, watches only. It's not like Ethos is a distributor, keep it aside only. So yeah, that's it. So chapter 6, the manufacturing advantage. Most people don't realize Timex manufacturing in India. The company operates a facility in Baddi, Himachal Pradesh, annual capacity of 3 million watches. The plant assembles watches, analog watches, digital watches, mechanical watches, smart watches, connected watches, active tracking. And why this is important, because local manufacturing creates better inventory control, faster launches, even lower logistic cost, higher flexibility, and potential better margin, especially when the global supply chain become volatile, currently like this Strait of Hormuz. Chapter 7, the premiumization opportunity. India's luxury consumption story is still in early stage. Look at what is happening across the category: premium smartphone, premium cars, premium jewelry, premium apparels, premium travel. Consumers are upgrading everywhere. Watches are not exception. So this directly benefit Timex because it owns brand across the every price point. So and as a consumer move upward, Timex can move with them, and few companies have this kind of advantage which Timex has. Chapter 8, what management is actually building. If we simply strategy thing, management is doing 5 things. So first step is strengthening Timex core brand. Second is expanding into premium portfolio. by like this Aston Martin, Versace. Third is scaling the luxury brand, and fourth is grow in through e-commerce aggressively by doing the discounting and all that stuff occasionally. And fifth is improving profitability through premiumization. This is not a volume game, this is a value game, and that's why margin are improving. So I can understand back in a decade back when we were crazy about the watches, friend group people were fossil, and now I think so India's new fossil is Timex core brand. Risk investors should watch is no business is risk free. There are several risks. Competition. Titan remains dominant player. Global brand continues to enter in India. Consumer spending cycle. Watch purchase is discretionary. Demand can slow down. Has economic weakness, and fashion risk. Consumer prefer change rapidly, and brand need to continuously stay in relevance. So luxury execution. Scaling luxury brand requires strong positioning and marketing execution become critical. Why the market is re-rating Timex? For a year, Timex viewed as a slow growing watch company. Today the market is starting to see something differently, a consumer brand platform, premiumization play, a e-commerce growth story, a luxury retail expansion story, a company that transformed from survival mode into a growth mode, and the FY26 numbers suggest this transformation is accelerating. So final thought from my side is the most interesting company often nobody talks about is Timex. Doesn't manufacture normal watches or kind of stuff. It doesn't about building an AI model. It operates in fashionable sector, and it sells the watches. But behind the simple product, it lies a powerful trend. The consumer are becoming wealthier, more aspirational, and increasing willing to spend more. And Timex positioning itself exactly where the spending is heading towards. FY26 maybe remembered as a year of investor finally started noticing Timex as a brand, and biggest opportunity are not created by new businesses, they are created when old business reinvent themselves, and Timex Group India may be one in the middle of exactly such transformation. So that's it for today's video, guys. If you like the video, please like, share and subscribe the channel. Make the YouTube brother happy, and let's meet in the next video. Bye bye investors.